Hey, welcome to Mullen Stock. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. And also remember that this is not a financial advice video. Today we will provide you with a quick overview of some events that occurred with Mullen, discuss a few data points, and now that we are in October, I would like to talk about NASDAQ compliance and the next steps for Mullen investors. Mullen closed in the red today with a 0.8% loss. When it comes to volume, it was quite low, with only 20.86 million shares traded compared to an average of 38 million. However, there was some optimism in the options market, with 78,000 calls purchased compared to 24,000 puts. Based on this information, it seems that there is some optimism for the future. However, there is an outlier where shorts are protecting their positions, perhaps indicating that Mullen had shown a glimmer of hope. Speaking of individual calls, for the upcoming expiration date, which is October 6, there is approximately 6,000 open interest at a strike price of 50 cents, 7,000 open interest at a strike price of $1, and 2,000 open interest at a strike price of $1.50. If Mullen manages to surpass the 50-cent strike price and closes there on Friday, market makers will need to cover at least this 6,000 open interest that is set to expire in the money. This is something to keep in mind. But when it comes to shorts, they have done something noteworthy today. Today, they have returned 389,000 shares, which were previously shorted at 20.07% of the free float, making a total of 34.95 million shares shorted. The average cost to borrow is 21.91. Today, shorts have covered their positions, a day when they could have expanded their position, especially when the entire EV sector has faced headwinds. According to Interactive Broker Short Availability, approximately 2.7 million shares are available to be shorted. Therefore, the question of whether they will return shares has become a topic of discussion, especially when you look at many other recent growth stocks where shorts have increased their positions. This situation with Mullen feels a bit peculiar, but these are some things that we'll have to analyze by observation. When it comes to Mullen and NASDAQ compliance, I just want to discuss that because I've covered all the data points earlier. But now that we're in October, people are wondering about the chances of Mullen NASDAQ compliance. We know that on September 5th, Mullen submitted an appeal letter to NASDAQ and also paid $20,000 along with it, after which they requested a hearing. According to NASDAQ website, a hearing will be scheduled within 45 days of the appeal letter submission, which means the hearing date could be set before October 20th. In the case of options as well, that's why there is unusual buying of call options on October 20th. Which might suggest that people are optimistic about it. October 20th is a monthly option expiration date, so there is typically higher volume on that day. So there is a 45-day time frame when the hearing date will be set, and after that, people often get confused about what's next. So Mullen needs to develop a plan now and be prepared for the hearing, and the hearing panel will make their decision, depending on NASDAQ staff's discretion or the hearing panel's discretion. This means if they don't like Mullen plan, they can suspend and delist their securities. This won't be good for any investor, but it's just one possibility, and I'm sharing this information to provide context. Hypothetically, the hearing panel can also grant Mullen an exception, meaning they can stay on NASDAQ and be given an opportunity to rectify the deficiency within 180 days. This means if they need 120 days to meet the $1 target, they could get that chance. This entirely depends on the discretion of the hearing panel. I understand that Mullen has been working hard to boost production, so this is a possibility. The truth is that deciding to give only 30 days is not really fair. It's often around 180 days, especially when we look at other cases and their outcomes. In reality, NASDAQ is a business, and they need the money at the end of the day. And Mullen has always been paying their bills to NASDAQ. So perhaps they might be given a 180-day extension simply because NASDAQ is also a business. So who knows, this could happen or it might not happen at all. And when we look at the hearing panel, they are a regulatory body, which means they'd also have to safeguard the interests of the public and shareholders. If they don't like Mullen plan and find it too risky, they can also proceed with point C, which involves suspending the company and delisting it from the stock exchange. However, you can see that there are some other options that the hearing panel could hypothetically use, but at this stage, I believe these two options are the most likely, namely point 8 or point C. They could also make variations where they grant a 180-day extension with oversight, meaning the hearing panel will closely monitor every step because according to the plan, Mullen will need to justify every aspect. So how do they intend to surpass the $1 threshold as per the plan? How do they plan to rectify deficiencies? Will they rely solely on natural growth, assume revenue, or will they need capital? They will also have to provide a contingency plan for every point. If in the future, say in February or March, they require additional capital, and if their initial plan, like obtaining funding from Bank of America, doesn't work out, what is their backup plan? They will need to disclose all these details in their plan. But this is the point where some people are hypothetically discussing a reverse stock split, as Chris also mentions. To put it simply, a reverse stock split is included in the approved package of the hearing, meaning in the plan, and hypothetically, this tweet is written by Sam, which is very simple yet very accurate. The first step, which is most likely to happen, is that it will come solely from the natural growth of current revenue, and it's just about boosting production in this way. They will signal everything. And then the final signal is that if under any circumstances they cannot achieve control at $1, they will implement the reverse stock split. I know some people may feel apprehensive about this because doing 3 reverse stock splits in a very short time can seem completely crazy, which can be hair-raising, but unfortunately, it will most likely be part of Mullen plan. So now I'm sure some people will say they can't do a reverse stock split because they need shareholder approval, to the point where I think it's maybe imminent. And it's reasonable that it can create a lot of negativity, because I think in reality, in terms of the hearing date again, before October 20, Mullen needs to lock this, and because Mullen can't promise a reverse stock split if they don't get approval from shareholders, so maybe just maybe, I'm not here to spread FUD, but I'm saying that Mullen may call an emergency shareholder meeting just to get approval for the reverse stock split. So they have this plan, and they have the potential to enter the pipeline. I'm not saying this is the next logical step, but still, after this one thing, after my research, I think that if Mullen or any company can't make any changes to the current situation under NASDAQ plan, it should be locked, because if you think about it, what can Mullen hypothetically say that they are planning to buy back $2 billion worth of shares, but they don't have the funds, they don't have the shares. What can they do? How can it happen? You need some approval to make it happen. Sam's tweet is very accurate and true. But sadly, it also indicates that a complete reverse stock split is a possible plan. So here's something you should remember once again. So after saying everything, and you might be hating me for mentioning this, some people might say, no, hold on, Mullen can't do another complete reverse stock split, because they'll cross the benchmark set by NASDAQ rules. You're right, they'll cross that rule. So you can see under NASDAQ rules, excessive reverse stock splits. The thing is, normally a company can't cross a 1 for 250 ratio. And right now, if I remember correctly, Mullen is at 225. So this way, Mullen is still fine with NASDAQ because they are technically below that threshold. But if a company crosses this threshold, it means they don't get any benefits under NASDAQ Rule 5810C3 sub. Technically, this means that if Mullen does another reverse stock split in the future, they won't get any benefits from NASDAQ. So if a company has a 1 for 400 ratio, they can be listed on NASDAQ, assuming they improve their deficiencies, but technically, if they are below that, they are immediately delisted from NASDAQ, and they don't get any 180-day extension or anything. So technically, yes, Mullen can do a reverse stock split if shareholders approve it. So again, I hope I haven't ruined your night, but everything written here is the worst-case scenario. I'm just bringing it up so that people can know that this is a possible option in the future. So to recap, I believe Mullen is very likely to get a 180-day extension, and we'll hear about it at least 3 days after the hearing date when they consider this plan. Some people ask if we'll have access to that plan, and I believe Mullen won't share that plan. It won't be included in SEC filings or anything else, so unfortunately, the general public, shareholders, and insiders won't be able to see this plan. Only the hearing panel will review it. Do you think I'm wrong? Do you think they won't do a reverse stock split? Do you think they'll naturally cross the $1 threshold? And then they won't need to do anything like this, guys. That's all we have for you today. What is your opinion about Mullen stock? Get involved and let us know in the comments down below. Thank you for watching.